Welcome to episode number 444 of Get Paid for Your Pad. Now, today I'm super excited to record this podcast for multiple reasons. Number one, we have an amazing guest on the show who's building a really cool company that I'm really excited about. But also, I'm using a new microphone, the same one that Joe Rogan is using. So we're trying to really up our game with the production of the podcast. So I hope this sounds good. I hope the audio is good. I probably have to make some adjustments when it comes to all the settings and the levers that I can now play with. But we'll let's just get into it. Today I'm here with Derrick Barker. He is the CEO of Nectar, which is a marketplace for real estate cash flow. And we're going to get into what exactly that means. So without further ado, Derrick, welcome to the show.
Thanks. Thanks for inviting me on.
Yeah, absolutely. Yeah, I think you guys are doing something really cool in the space, and I think there's a lot of opportunity in short-term rentals going forward. I know there's a lot of investors that want to get involved, and you guys are kind of connecting the investor with the short-term rental manager or the short-term rental operator, which is really awesome. So let's dive into it. Let's give us a bit more detail on what Nectar exactly is.
Yeah, sure. So I'll give you first a quick background of my background to tell you how I got into Nectar, and then we can dive wholeheartedly into what Nectar does. So I'm a serial entrepreneur, but I've been a real estate guy my whole adult life. After exiting a venture my junior year in college, I started buying real estate down here in Atlanta when I was in college. And I did a quick stint on Wall Street where I traded structured products for a big bank. But then after a few years of that, I built my portfolio to about 500 units. And I was at a turning point. I decided to come back home to Atlanta. My neighborhood was super hard hit by the financial crisis. We had blighted apartments all over. And I came and created a business out of buying these really, messed up apartment complexes that were distressed, and then putting a bunch of money into them, turning them around, bringing resources, and I became a turnaround specialist. Built that to almost 5,000 units all throughout the country. And my partner, Brittany, within that portfolio, started a short-term rental portfolio. They had about 125 short-term rentals, mostly in the Southeast, and but also in the Southern California area. And that was my real estate, background. So I learned pretty early on how to build a fast-growing and operate a fast-growing real estate business. So that's fast forward that to 2019. There was as much distress around. I was looking for something else, and then the global pandemic happens, which hurt. Everybody got hit by that. But for us, the biggest problem was the financing market shut down. It was difficult for us to get equity capital because we were raising LP equity to do our new deals. And we mostly did apartment complexes. But after a dip, our short-term rental portfolio was on fire. I mean, it was different. We were doing longer-term stays and everything, but we really got to a point where we're hitting record revenues and record profits month over month. So we came up with the concept in order to finance ourselves of packaging our cash flow into a security, selling it to investors, and using that capital to go and buy our next deal. And that's how Nectar was born. We took that infrastructure, that framework, and we built a marketplace to allow any real estate entrepreneur who has any short-term rental operator who's experienced, who has the serious management operations in place, to be able to sell a portion of their future income on their stabilized properties in order to get non-dilutive cash upfront that they can use to hire staff, to buy a new property, to build their portfolio on whatever way they see fit. So that's our quick.
Awesome, man. It's quite a story you got there, and congrats on all the successes that you've achieved. Sounds like you've absolutely crushed it with your previous businesses. So that's awesome.
Thank you. Yeah, we had a wild ride.
Yeah. I know all about it. I was a trader in the financial markets in 2009 as well. I remember I came back from holiday on a Monday morning, and my boss came up to me and he's like, yo, I've got some announcements for you here. Lehman Brothers just went bankrupt, and we bought I can't remember how much it was, but millions of dollars of stocks from them.
Ah.
and you're gonna have to like trade out of that portfolio the next few days. That was like my comeback from holiday. I was like, holy crap.
I'm
Yeah.
sure that was fun. Yeah, similar stories. I was trading structured products, so like 2009, 2010, 2011. There was a lot of a lot of interesting trading going on. Fortunately, I missed the 2008 crisis. I was still in school then, so I didn't see the worst of it, but I did see the aftermath.
Awesome, man. Well, let's get a little bit more into the details. So there's one thing that you guys are solving is, it's hard to get funding, right? For if you buy like a home where you live in, then you can get a traditional mortgage. But if you want to buy a place and rent it out on Airbnb, if you just walk into a bank and say, "Hey guys, I want to borrow some money, buy this home and rent it out on Airbnb," probably not going to fly, right?
Right.
So there's some other options like hard money lenders or personal network and stuff like that. But it's not easy. Did you guys kind of recognize that when you started this business?
Yeah, we did. I mean, that's why we're starting really with short-term rentals, even though we did short-term rentals and we've had apartments and single family, but we're starting here because that's where the financing is toughest. But you make a lot of cash flow, right? For the asset value, you make tons of cash flow. So there's a disconnect with the market there. And like just to be clear, what we do is we are not a mortgage lender. So you're still going to have to go out and get your mortgage for 65, 75% LTV, whatever the bank will give you. And of course they're going to, ding you, even though because you're doing short-term rentals. We come in for the capital, like you can use our capital for down payment money. So say you have a property, so you have a couple of properties and you're making $10,000 a month in net cash flow after your mortgage. We allow you to sell, if you go through and you're top decile and you have great management in place and you've gone through an awesome program like Legends X or something, and you're really tip top shape, you're top decile, we'll let you sell up to 65% of that monthly cash flow. So say you're making $10,000 a month, we do go through the underwriting, you sell $6,500 a month, we'll wire you $150,000 in exchange for that $6,500 a month income stream. And you can use that money as a down payment. You can use it to hire a staff and use the rest of it to, add a pool to the back. Kind of, it's flexible capital. And it's not, in most circumstances, it's non-recourse. We don't look at your debt to income ratio. We're just looking at your property, how it performs, your actual systems, and how good an operator you are.
Yeah. That's awesome, man. I love that you have that flexibility to invest in a team member or, just upgrade, do refurbishment, stuff like that.
We also just in terms of so some other kind of important details is it's not this is something where there's no like it's we work with you, we're a partner that works with you, so like there's no hard default. If you have, say you sold that $6,500 a month, you're making $10,000 a month, say you have slow season come through and I don't know, COVID spikes and you have a bad month, you make $5,000 this month or something. It's not like if you went and you got a loan from a bank, then it's game over, you're in default. For us, we're flexible. We get that there's seasonality. We'll take that, that delta. So you sold a 6,500, you made 5,000. We'll take that $1,500 delta. We'll add it to next month so that you can, have that fluctuation. Yeah. There are teeth. If you miss 3 payments in a 12-month period, then we have some rights, and we can, get into, kind of those details. And we can extend, but the idea is we know how it is to be an operator, and we're here to be a partner to provide resources and, to help you achieve, the goals that you have for your portfolio.
Yeah, that's awesome. So you mentioned that we can borrow like 65% of the revenue, right? How do you calculate like the payments in terms of like paying back the loan and also the interest? How is the interest calculated?
Yeah, so I got it. One thing has to just be clear is that we are not a loan. Like it's not a loan or traditional loan. There is no interest rate or maturity. We are allowing you to sell a portion of your net cash flow. So like so like that, and that's pretty important, because that means that if you already have a mortgage in place, we don't take a lien on your property. So your lender, we're invisible to your mortgage lender. We allow you to sell a portion of your net cash flow. So, and we're underwriting the net cash flow that you are generating. You look at your revenue over the past, say, couple of years. We look at your utilities, taxes, insurance, mortgage, and you're looking at what's net of that. What's net of those, turnover costs, and look at what's net of that. And that's the portion of your revenue that you can sell. So we make sure, like, and we give you, we look at 8 different criteria, how we, kind of judge the underlying cash flow, like length of the cash flow and the strength of the cash flow, the strength of the market, what your what your operating systems look like, your reviews. We look at all of these things to judge how high quality and how stable that cash flow is, because that's what we're counting on. We're counting on you having stable cash flows or increasing cash flows. And we're set up where you keep the upside. So if you go from making $10,000 a month, you sell some of your cash flow to us, you improve your property, now you're making $12,000 a month, you keep that upside. We get our $6,500 a month income stream.
Got it. Okay, so that income stream that you're buying, that doesn't have like an end date or something. That's just like,
it does. It's a 3-year term. So that's a great question. So like we do 1 to 5 year terms. But the bulk of what we've done, I think we've done 3-year terms for everything but one. We've done 1 5-year term. But like the majority of what we do are 3-year terms, where you sell a portion of your cash flow. 3 years from now, you get your cash flow back.
Got it.
We go on about our way.
Yeah. Okay. Yeah. So just an example, let's make up some numbers here just to make it easier to understand for people. So let's say I'm making like $10,000 a month, and I want to borrow like $100,000, right? What would roughly be that monthly payment based on that 3-year term?
Give me 1 second to pull up the model.
Sorry for asking these hard questions.
No, I should have had this up already. So just now I got it up. I just want to make sure you're making about $10,000 a month, and you are, so it's $120,000 a year, and you want to sell and you want to get $100,000 up front. First of all, if you're making about $10,000 a month, we can get you roughly 150, up to 150, maybe even a little bit more, kind of depending on various factors, depending on, how high quality you are, how much experience you have, how long you've been in the market, how your ratings and reviews are. But if you wanted to do $100,000, give me 1 second. That payment would be closer to $4,000 a month, just over $4,000 a month. Gotcha. Somewhere in that range, 4,000, 4,200, something in that range.
Yeah. Okay. And do you know what, like, if you calculate that, if you say, okay, well, 4,000 a month, it's like 48,000 a year, roughly, times 3. So we're looking at like, just doing this out of the top of my head, like looking at 144,000 in total. If you calculate that interest rate, do you know what I'm saying? Like what kind of rate?
I think that's a better question I can answer more quickly. The implied interest rates. So like, I want to just clarify, and like, I have to say this, these aren't loans, because they can't be loans because all your properties are going to have mortgages on them, and your lenders aren't going to want you to have a loan. This is taking the place of, say, LP equity if you're going to raise money from investors. Yeah. So that's the place in the capital stack. But the implied interest rate is going to be somewhere between, let's say, 11 and 17%, depending on like how much you want, how high quality this, stable your cash flow is, everything else. So, 11, 12, 13%, that's more expensive than a mortgage, but this isn't a mortgage. We don't have recourse. We don't have a lien on your property. but it's way cheaper than if you brought an equity partner.
Yeah.
That's how I think about it.
Yeah. Yeah. Thank you for clarifying that. That's kind of what I wanted to, get an idea of, like, of how that would work. So awesome, man. What are some, like you mentioned, you've done quite a few of these deals already. Like, what's your experience been, and what are people typically using the money for?
Yeah, so we have three, broad customer types. We have managers, we have arbitragers, and a lot of arbitragers don't have a lot of different financing options, and we have owners. A lot of the owners have been using the financing to buy another property, to either put a down payment in another property, to improve their property. We've had people, as I said, we had a guy who wanted to add a pool, and he could keep operating this he sold the cash off of 3 properties. He added a pool in one of them. He kept it up, and that worked out. But we had a guy bring in a manager who wanted to hire business development people, and then he was going to apartments. He was a manager for apartments and doing short-term rentals there. And a lot of the apartments would say, yeah, we do it, but we're not going to put up the money for furniture. So he basically used our funds to front the money for furniture so he can continue to grow his management contracts. We've had, various ways to grow. Some of the arbitragers or some of the owner or some of the managers want to own the underlying properties, and they use their income coming from their current portfolio where they don't own, to get a down payment to put down on a property where they do own. So that's a lot of what people have used. Vast majority of people either buying or improving a property or bringing on some team members that are going to help their business really continue to take off. That's what the vast majority of the people are using the capital for.
Yeah. And then what about the other side of this? Like, if I have like a couple $1 million and I'm looking to get into short-term rentals, but I don't want to, find a property, buy it, find a manager, I could go to you and say, like, hey, I'll buy some of those revenue streams.
Exactly. So we have a pretty, we have a $12 million worth of kind of capital that's come in from investors who are looking to do just that, have passive income streams that are backed by vetted, experienced professional operators. And one of the huge benefits to investors is the compounding. So instead of a loan, or instead of buying a property where you get a little money every month relative to how much you buy, and you get all your money back at the end. So if you put $100,000 and buy a REIT or even a property, you'll get a little money, $5,000-$7,000 a year. And then at the end, 3-4 years down the line, you get all your money back plus appreciation. This doesn't work like that. You put up $100,000 and you get an income stream of $30,000-$40,000 a year, where you can every month you get a big distribution. And what the vast majority of our investors do is reinvest that into buying new cash flows every month. This way, you let the power of compound interest really work for you. You build more and more, a bigger and bigger and bigger income stream. So we have people that want to reinvest all their distributions for the first 2 or 3 years, and then by then they'll have an 80% cash on cash income stream coming in, and that way you're able to compound much quicker than a 5 or 7% type cash on cash that comes with most investments out there. Yeah. You're backed by super experienced real estate operators in a growing space.
Yeah. What's the process like for somebody? If somebody's listening right now, somebody's interested, what does the process look like? Is there like an application procedure or something like that?
Super fast application. You go on our website, you enter in your information. We of course look at your financials, we look at your OTA links. We might have, and then we'll give you a quote. We can give you a quote in a day. We say 48 hours. We try to do between 24 hours. We just have to be realistic. Sometimes things build up, but within 48 hours, we'll tell you how much money that you'll have. And then we just verify that the things that you told us was true. We look at your bank statements, of course, which you can, just plug into our system, to your accounting software or whatever. And then we can get you funds in a matter of a week. It's a pretty quick process. It's pretty painless. If you have everything in order, it can be, Monday, you can, have the application in, and Wednesday or Thursday, you can have the funds in your account.
Wow, that's very fast. That's definitely faster than going to the bank.
Definitely faster than going to the bank. It's more expensive, but it's faster and it's more flexible. And we're a part. Look, I built a real estate business, bootstrapped from the ground up. And sometimes you need cash,
Yeah.
Sometimes there's an opportunity that's there and you want to grab the opportunity. I've underwritten hundreds of millions of dollars, maybe over billions of dollars worth of real estate. We have our underwriting, processes and systems in place. It shouldn't take long. As long as we can see it, verify it, make sure that everything checks out, then, we should be able to get that capital out to you.
Yeah. Sweet, man. Sweet. So what's the website where people can apply?
Yeah, I'll add a link specifically for your viewers to our to the show notes. Any of your viewers, we have a wait list right now of kind of operators that that sometimes bills intra-month, and then we clear it by the end of the month. I'll make sure that you all get to the top of the wait list if you use this link. But you can go to mynectar.co, mynctar.co, mynectar.co. You can apply there. And you can go through the process. You can get an instant estimate of how much we think we can get you. You send in your information, and we'll give you an actual quote in a matter of 48 hours.
Sweet. That's awesome. So mynectar.co is the URL.
Exactly.
Awesome, man. Let's talk a little bit more about the sort of the opportunity that exist in the short-term rental market right now, and where you think the industry is kind of going, and you have so much experience in real estate. You've built these businesses. You understand short-term rentals. You're talking to investors. You're talking to professional hosts. What are your thoughts on like this year, 2022?
We're not going back to 2019 is what I think. So like, and by that, what I mean is people are just living differently. We shifted the vast majority of our portfolio to more longer term stays. And I think that that's a trend that's going to continue in 2022. We're going to see, these, different kind of niche groups that want to travel and be in a space for a week, a month, or 3 months. I really believe in that trend. The flight to secondary and tertiary kind of cities, like the vacation rental type spots, like I don't see that abating this year. I don't know if it's going to stay as hot as it is now forever. But the pressures that have pushed us from having like where short-term rentals have like really the demand has gone to those secondary and tertiary markets. I think they're still here. And you're going to continue to see like performance there. And I think that like right now, like quality operations and people who are providing good hospitality and good customer service and have like quality team, and they're going to outperform. I think the gap in performance is going to grow. Just like as the field matures, as the people out there that are investing in their business that are getting better and better, they're going to reap the benefits of that investment as the industry itself just matures and institutionalizes and professionalizes. And that's something that we want to be a part of. We want to be a part of investing and empowering the new wave of entrepreneurs that are that are professionalizing this market, because we really believe that that's the future. The future is people that take this seriously as a business.
Yeah. Yeah, I couldn't agree more. One thing I noticed, I just stayed at 3 different Airbnbs in the last week, and I'm noticing even in myself, like I have higher expectations than, let's say, like 5 or 10 years ago, right? Because back then the mentality was like, well, I'm staying in somebody's home, like what can you expect? If I have a bed and if the Wi-Fi works, then I'm pretty happy, right?
Exactly.
Versus now, like you said, like as the industry is maturing, like the expectations on the guest side go up. And so you can't really get away with providing a mediocre experience anymore.
Exactly. 100%, which means investing in your business, which is why we kind of exist.
Yeah. what are you seeing on the investor side? Do you see any changes over the last 3 years? Since the pandemic started.
So for our investors, a lot of our investors are interested in the space, but they're not like professionals in the space. Like they aren't like deeply knowledgeable. They aren't hospitality investors. They aren't traditional real estate investors. Some of them are, some of them definitely are, but more of them are people who they see that this space is professionalizing. They see that there are great returns here. And they want to be able to, become a part of that and have a stable investment that, they can take lots of like risks. They can go buy crypto, you can go buy stock. There are lots of things where you can take a lot of, upside risk, but people want something. There aren't as many options where you can buy something that's stable, that's diversified, and where it's completely passive, where we do the work of all the vetting and like, best use our past years of experience to make sure that this cash flow, this income stream is secure. And one note about our investors. So like our investors are not buying any individual person's cash flow. We are taking a dozen or a couple of dozen individual cash flow agreements and packaging them together into a pool and then selling a fractional ownership of that pool to investors. So investors buy into a pool of a dozen diversified operators who are well vetted, so that any one hiccup of one person has in 1 month doesn't really hurt them that much. So that's kind of something that we're seeing from our investors. They like this structure and how it just decreases the risk. And because it decreases the risk, it gives you, the operator, cheaper source of capital where you can fund yourself and you keep all the upside. You don't have to give ownership of your property to an investor.
Yeah. Awesome, man. Last thing I wanna touch on, since you have such entrepreneurial experience, I know a lot of people that are listening to this podcast, especially the students in our program, especially Legends X, they are, the biggest thing that they are struggling with is really the entrepreneurial side, right? The hospitality side is something that a lot of hosts have done really, really well. You look at the listings, they're amazing. They're getting 5-star reviews and everything. It's like building a team. It's building the systems, right? That's where people struggle with. So I wanted to just quickly pick your brain on that, since you're such a successful entrepreneur. What are some tips that you have for people that are just starting out? They have a couple units and they really want to grow a business.
So, okay. So you're already in the business, you have a couple units, you want to grow. Firstly, I'd say congratulations. You've taken the first and biggest step, which is to get out there and start doing it. Like there's lots to learn. Like you can, look at all the YouTube videos and do all that stuff. But nothing like getting out there and hanging your shingle and like opening up the storefront and doing it yourself. Because there are lots of intangible things about you that you need to learn, and how you operate and how you become successful. But then once you've taken that, initial plunge out there, like you're going to feel like it's easy to feel overwhelmed with all the things. Like you start off, it's not just hospitality, it's a business. Like, you have HR, you have taxes, you have like financing, you have all these other things coming at you. And it's easy to like be running around with your hair on fire. I'd say like, you have to get out of the habit. One of the first habits to break is the habit of, I can't invest in my business, or I can't do something to take things off my plate because I'm too busy doing the things that are on my plate. Like it doesn't work. Like you have to say, okay, well, maybe it's like, if it seems like things are on fire and there are fires everywhere. Some fires, it's okay to let burn a little bit while you like construct, like the fire hose, like, where you like plug the, you know what I'm saying? I'm stretching this metaphor, but like,
I love it.
It's okay to like write down, like if there's something that you're doing over and over again, that's like takes up a lot of time, figure out how do you make it a list, make a checklist, or make some kind of like, this is how I do it. Doesn't have to be perfect, just something that you can hand to somebody, virtual assistant, an intern, a friend, parent, or ideally a hire that has a lot of experience. But like, and then say, hey, take this, and then you can iterate on it. But like then you have to start getting things off your plate, like low value things that take up a lot of time. I'd say like, and then when you're thinking about putting together a team, quality. If you find like a cleaner, for instance, like someone who's good, get someone who's good, get someone who has experience. Experience is more important than cost. Or someone, to an extent, but someone who's gonna like actually go in there and make it happen and do the right work and do a good job. If they cost a little bit more, like you're saving money by spending more to get that, you know, high quality. And if you do get them and you get somebody who's like good, wherever they are on your team, love them, you know, like treat them well. You know, you want to build a culture of like you invest in your team, because that way your team will invest in your property and in your business, which ultimately is investing in yourself. Those are, I know that's super high level, but like, you know, those are things that if you get that right, you know, find a way to like get things off your plate, get help. And so you can spend your time doing the high value things, building your business, going from, you know, 5 units to 7 units, working with the groups like us so we can finance you, or working with, you know, apply to a Legends X. I know I'm kind of shouting you out here, but like apply to some program like this where you can really get some knowledge behind you. Like those investments pay off. You know, invest in yourself. Those investments pay off a lot, have a high ROI.
Yeah. No, I love that that metaphor that you're using with the fire and the fire hose, because it's so typical. Like we see that all the time, and we call those people with the hair on fire, we call those hectic hosts.
Yeah,
So
it is hectic. It can be hectic.
yeah, exactly. Yeah. But I like how you were describing it, like the hair on fire. And it's so typical because it seems like I think it's like a catch-22 is what you call it, where it's like, I'm really, really busy. So I don't have time to hire somebody so that I'll be less busy. So,
Yeah.
you know, you're kind of like, there's no way out almost, right?
Yeah.
So I love your advice where you say like, hey, let the 20% least important things, let them go for a little bit, and you know, focus on getting some help so you can get stuff off your plate. So that, because that's the only way to move forward. Always, otherwise you're always going to be stuck in that hair on fire position, right?
And it's not going to feel good. Like it's not going to feel good to let some fire burn, and you know it's a fire there and it's burning. But something, if it's not going to kill you, don't let the fire burn that's like like going to kill you, you know, kill the business. Put out those fires. The other ones where like it's not going to kill your business for like a month, you know, like use that time, you know, to get yourself down the road, you know.
Yeah, great advice. And you know what I noticed in a lot of our students is that they, just like you said, they feel uncomfortable letting some of those fires burn because they like everything to be perfect. Mm-hmm. Which is kind of, it's very hard to build a business if everything has to be perfect.
Right. It's great to build a GPA. It's great to build, like, you know, some things like, you know, in school. But to build a business, things aren't going to be perfect. It's going to be messy. I don't know. That's been my experience. That might not be everyone's experience. My experience is sometimes like you look back at 5 years down the road and it's like, wow, look at this beautiful thing that we built. But like during that whole 5 years, it's like messy, just like scrapping and like building, and, you know, and that's just kind of, and that's okay.
That's just how it is. That's the journey, you know, that's part of the game.
Yeah. What do you think? What do you think about the you know, this, how this stands versus kind of the other financing options out there? And what are you seeing kind of some of your students and people kind of, you know, using to grow their portfolio?
Yeah, I mean, I think the solution that you're offering, what's great about it is that it's fast and it's, you know, it's accessible, right? I mean, a lot of students in our community, they run into this problem like, well, how do I find funding? Like what, like I don't know anybody who's rich. I don't have any connections with, you know, hard money lenders, because there's no marketplace where you can go and you can, you know, choose your hard money lender and, you know, create a deal. It's just not very, it's just hard. It's not very, most people are not naturally connected to those people. So then it's a big question mark. It's like, well, where do I find money? Right.
Mm-hmm.
And like you said, I mean, there are sometimes like opportunities pop up, and you need some money to take advantage of it. And if you don't have those connections, then it's almost like you have no chance almost. So that's what I think is awesome about your platform, and it's very innovative is the right word. It's innovative. I love innovation. I mean, sharing economy is all about innovation. It's all about disruption, right? So I think you guys fit right in there.
Yep. And historically, big banks, like their business innovation doesn't work in their business model. In terms of like, because, they're big and they have a big platform and they have to do the things that fit in the box. And that's why we exist, to help built innovation to help fund innovation in the built environment.
Yeah. Yeah. And the other thing, just a quick personal experience that kind of relates to this as well is I moved to the US in 2000 and end of 2009. No, sorry, end of 2008. And I remember, when the real estate market crashed, I was interested in potentially buying like a condo in Miami or something, because those things were, they were so cheap compared to, a few years before that. So I actually went to the bank and I tried to get a mortgage to buy one of those condos. Now I had, I had some savings in the bank account at the same bank. I think I had about 75% of the purchase price of the home that I wanted to get a mortgage for. And they turned me away right away because they said I don't have a credit score, or my credit score was low because I just moved, right? So I was like, hold on a second, like, you can see my income, right, over the last few years. I have like 75% of the value of the mortgage. I have actually in cash in your checking account right here at this bank, and you don't want to give me a mortgage. And I thought it was frustrating. So that's why I love, like, services that you're offering, or similar services where it's like, hey, let's empower the individual who doesn't have the connections, or doesn't fit the profile of the banks.
Exactly. I mean, all kinds of crazy things are going. It's around the same time frame. You'd have banks that have lent on a cash flowing property. The property, they've never missed a mortgage payment. It's still cash flowing. I mean, it might be not cash flowing as well, but it's still cash flowing. But because the valuation went down, you're going to go and force these people to default, force them to put up more collateral. Like the way that banks operate is, it's just, there are better ways. And we never want to be that tone deaf, to the operator and to what's going on there. Like, we want to be like a partner. We want to see what you see, and be able to be a capital provider that empowers you and can look at it in, like, in me, like when I first started out in the business, no one would lend to us either. We were buying it. We were like, we were buying a property, an apartment complex. It was the same management company going to be managing it. We were going to be buying it. It was cash flowing. We had the equity to put up the down payment, and they wouldn't give us the loan until we got like a co-signer and everything who had the amount of money that the mortgage was in their bank account. Now, we want to allow people's performance to speak for themselves. And if you can show a track record that you perform, that your property performs, like, to me, that should be the way that you're judged.
Yeah, 100%, man. Awesome, dude. Well, thanks so much for coming on the show. This is really excited about what you're creating. And just before we leave, let's drop that URL one more time where people can find more information and apply.
Yeah, mynectar.co. That's mynectar.co. mynectar.co. Go to the website, apply there. Feel free to reach out directly, to me or to Brittany if you have any questions. We get a lot of inbound, so like we'll get back to you as quick as possible. But mynectar.co, go online. You can get an instant quote, or instant estimate. We'll give you a quote within 48 hours. Have your ducks lined up. We have capital ready to deploy. And we love to empower experienced professional entrepreneurs. So we love to see those people and love to see you grow. Let us know how we can be part of your story.
Awesome, man. All right. Well, that's it, man. Thank you so much for coming on, and I'm super excited to to see how you guys are gonna disrupt this industry.
Awesome. Thanks for the invite. It was a great conversation.
And thanks to the listeners. On Friday, of course, I will be back together with Eric. We'll do our regular Friday episode, and next week I'll be back with a interview with a host or a short-term rental professional. So we'll see you then.